Happy Monday, traders. It's 8:02 a.m. Chicago time on the 27th of January, 2020. This is episode number 1679. Today, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, as you probably already know, risk-off sentiment continues as the market corrects and continues dropping. The bonds are up 31 ticks, almost a whole handle. Gold is up $9.40, trading at 1,581.30. The Bund is up 69 ticks, and the 10-year note is up 15 and a half ticks from Friday's settlement prices. The biggest drop today is crude, followed by the DAX and the Euro stocks, all down over 2%. Crude is down 2.58% from settlement, down a buck 40, $1.40, trading at 52.79, quite a ways from its most recent high of probably somewhere around 13 and a half dollars higher a barrel. And that's where we stand. The Nasdaq's off 172 points, almost 2%, and the S&P is down 52 points, 1.6%. The Dow's down 451. Again, this is a market that is very firmly in a risk-off sentiment and has come off quite rapidly. Friday was an unusual day across the board where the market is really responding to recent news. We're seeing a pop in crude right now, moving from 52.44, pretty strong lifting up into 52.96, about 50 cents higher. The indices are trading sideways through most of the session. So that's where we stand. A quick glance at the calendar. This morning, the IFO business climate came in. Oh, what's going on here? The IFO business climate out of Germany came in way off, down 90. It came in at 95.9 versus 97.3. There were other releases, but the what's remaining on the calendar is at 10 o'clock Eastern. We have new home sales month on month, expecting 0.8% and 0.725 units. And then this evening, we're looking for the Australian NAB business confidence. And that's all that's on the calendar. The news, of course, is the attack on the U.S. Embassy, and I believe last reported were direct hits on the U.S. Embassy in Iraq, with the U.S. having assets up in the air through most of the night. I'm not sure if there was a counterattack. The market is anticipating that this thing actually isn't over. In addition to that, there's the coronavirus spreading to Toronto and several other places. So, interestingly, this morning there was news that two people, a male and a female, were confirmed having had the coronavirus, and then now the flu seems to have subsided with them. So whatever treatment was being used may have been effective. But in any case, it's just, what we have here is a bit of a perfect storm. The market has really stretched the statistical norms, historical probabilities of where it was in terms of this rally. This rally is really unprecedented since the time the repo operation started with the Fed back in September, and has helped push the market up quite a bit. Just markets really flooded with cash, and the Fed is continuing to do so because they believe that there's a cash crunch globally. And so we have a scenario where that's being pushed and very, very minimal, very minor corrections so far. The market is a two-way mechanism and it's been a one-way market for a long time. And that, with the news events, probably is giving us this opportunity where the market is falling off. So that's where we stand. I'm not going to spend much time on the scenarios from Friday. I received a comment that was interesting regarding the scenarios. I think this person has been waiting for a long time for this drop to actually come out and say this, but the scenarios shown here are built on how the market trades day to day. Friday was a almost a 3 standard deviation move. Um, so highly unusual. The probability of the occurrences inside of a 3 standard deviation move are like 99.7% of the population is represented there, which means that there's a 0.3% chance of something like Friday taking place. But still, I still get the comment that, hey, how about your scenarios now? And it's like, well, you can't really predict that the market is going to open and just fall 50 points. And the goal is not for me to predict. The goal is for me to take what I know, which is the price action that's here in the overall action, so the overall auction, and to look at what is likely to happen. So the primary scenario was the usual pullback, open auction pullback to the prior range, and then push up into 40 and 45. That didn't happen. And of course, scenario two, a squeeze into all-time highs, and then the market likely to correct after that, and it's likely to push back into the range with 33.15-ish, 16 and a half really being the target. Here's what actually happened. I'm not going to show it on the tick chart, the Renko chart, or the trigger chart because it's too big. Here's what actually happened. It opened up at 31.50, went up 4 ticks, and then from there, sellers started coming in. It had a downward skew. It had a downward skew from the open, and it breached the range. A nice close, a nice tag of the prior close, a little bounce there, and then from there, it became really obvious that the buyers just could not push price back up where normally they would do so. We went right to the target area of 33.15, 16, a little bounce into mid VWAP right here, and then from there, it really is a bona fide trend day down as the IB low is broken and the selling accelerates. Um, the selling accelerates through the most recent low, and what we end up doing is putting in what looks like a higher high to Thursday and a lower low in what is an engulfing day. A very, very clear trend day, as we could see that the distribution of volume kept moving down with price, and the market's accepting prices lower. We did push through 3,300 all the way down to 32.80.50, which was the low of the week, and then our recovery was shut down right at the 3,300 area, and we've held steady. Since then, the market's closed, and again, the Baghdad news and so on came in, and so we show up today and we find that we're actually in a gap. We've gapped down. This is, again, this is Friday right here. This is Friday's action. This is Thursday night, Friday overnight. And then this is the current action. And it looks like it attempted to be responsive. We opened, and traded the overnight session very logically. I mean, when we have a trend day down, and then the market stops, we tend to open and push immediately and then come back in, hold sideways, and then the real move, around the European Open shows up. In this situation, we opened in a gap, pushed lower, came right back to the open, held sideways through the Asian session, and then when the Europeans came in, it fell right off. The IFO number came in at 4 a.m. Eastern, 3 a.m. Central, and it was pretty well off. It really helped precipitate the selling. A nice pullback to mid right here on the overnight session. We have a double distribution profile, very clear market structure here, a profile structure, and a clear inability by buyers to really squeeze through and get back to the overnight point of control and challenge this balance up here. It's accepting and is forming new balance down below. I expect that the market is likely to continue to squeeze lower as it's clearly needing to advertise. I believe it's showing that advertising for lower prices is very likely as buyers have not been found yet. Remember, the market auctions down to motivate buyers, it auctions up to motivate sellers because the market's ultimate job is to find those sellers, come back in, and then to find equilibrium. Chop is the market's natural, or balance is the market's natural mode, and it seeks that all the time, right? This is what we're looking for. How much would you sell for? How much would you buy for? We continue to do that again and again and again until we find a middle ground, and then trade and volume can happen, and that's how we establish a point of control. We establish value. Um, so that's how things are shaping up. Again, we're opening in a gap. We're opening in a gap down prior lows 32.80.50, and so we have gap rules today. The size of the gap between where we are now and where the gap zone is, including the gap close. This size gap makes it difficult. The probabilities of filling this gap zone are pretty low. However, because this gap is happening on the sell side, and we've seen this sort of gap take place in the past, we've also seen the market actually come back when there's a low probability, 16 or 17% historical probability of a gap of that size getting filled. We've seen the market actually accomplish that as buy the dippers step in, as more money comes in to buy bargains. So I wouldn't put it past them. Today, well, let's take a look at it real quickly. Let's take a look at CT Bookmap to look at the order flow overnight. An interesting picture here. Here's how things have played out. We opened in a gap. We tested below. We pushed back up. We had some liquidity at 70. The liquidity remains at 70 up here. Not sure if we'll get up here or not. I wouldn't put it past the market to do anything at the moment. And then it tested higher, and it came back to this consolidation area here from the open, and then just held up until the European Open. And from there, this is an impulsive move. The thing with this impulsive move right now is it never got its continuation. So my expectation, if the market were to follow the normal pattern, my expectation is this low, the overnight low at 35.50, is likely to be taken out. It is likely to go because this is a bona fide impulse here, and it held around the 50% area, the mid of the session, as I talked about, and has not completed its move, in my opinion. And the market doesn't have to do anything. It's not required to do anything. But the normal behavior is that it would continue and test through, so we can see if there are some real buyers down here, and that's how things are shaping up currently overnight. From an order flow perspective, if we squish this down to see where the liquidity is, we have some at 32 and 32.50, and then below there at 26, we're in the 32 handle. It's interesting how quickly we fell out of 3,300. I believe that the intermediate term we're likely to hang out here, down here for a little bit. We'll see what happens next. The big if is the big if is whether or not the Fed does something. If they start to push for some sort of intervention just yet, or will they let the market kind of do its thing? But that's the liquidity picture overall. This 32 area is something to look out for. We do have a gap beneath us at 32.16 mid, and that's the next big target down. Let's take a look at what we're expecting for today. Here we go. So again, something to keep in mind, please, is that this action here is not done by short-term traders. And generally, our areas of interest and so on are built on various time frames, including the short term. Generally, short-term traders do not push a trend. And Friday's action clearly was a higher time frame. They don't really care about our short-term levels. And so what we need to keep in mind here is to keep an eye on what evidence is there that the higher time frame is still in play. The higher time frame is probably in play here as money managers and so on are going to be active today. I think Friday had 2.27 million contracts in a day session, something like that. And when the market corrects like this, there is a very high incentive and probability for the higher time frame to participate, either to hedge positions in cash, in options, to take positions off in futures, or to adjust positions or adjust portfolios by entering or removing positions. Just depends. It's hard to tell what they want to do. But overall, just understand that the OTF, the higher time frame, is likely to be active, and so this is it's really important to recognize that the movement is likely to be pretty strong, and it's likely to carry a distance. And in this kind of environment, we would get higher volatility, we would get more follow through, we would get wider ranges, we would get higher volume. So the point being, this is where the people who are less disciplined, this is where the people who don't have a risk plan, this is where the people who don't have a plan at all get eaten alive. This is a feeding frenzy now. So if you intend to be here tomorrow, obey your risk. Not only that, but you have to obey your risk in a sense that it has to be adjusted for current volatility and rotations. So a day like today, anything less in the ES of approximately 5 points or 5.5 points for a stop is likely to be in the noise, is what I'm expecting. And so, where we've got Friday's action way up here, it's off screen, and we are currently trading down here. Okay, so we've gone through quite a bit to get down here, and the market does so very, very rapidly. Don't be one of these people that holds on to these trades just to prove a point, or because um, we're not accepting the fact that the market is being dominated by the highest time frame potentially, and therefore we step out of the way. We are small fish, and whales are feeding right now. So be smart and step out of the way. Obey your plan, please. The primary scenario here this morning, I expect a strong whip back, but overall, I'm looking for that low at 35.75 or so to be taken out, and I'm looking for it to extend lower. It's hard for me to tell what the heck they're going to do here because the market's out of balance by quite a bit. At the current price of 32.39, we're approximately 98 points below the high that was put in last Wednesday. I mean, it's quite a bit. We have not seen this sort of correction magnitude in a while, I think since October. So and it's it is likely to be a quite violent. So I'm looking for it to push lower, and then I'm looking for clues that it's likely to consolidate, and then an impulse up. And I'm looking for the market to come back in and put in a balancing day. A 100-point correction over 2 days is quite a bit, so I expect that it's likely to hold sideways and come back into the range today. That's the primary scenario. Secondary scenario, secondary scenario is we open, test down, push up. We're out of balance, and then I'm looking for the market to start working its way back towards the overnight point of control. There's a double distribution here in the overnight profile. Remember, it's got a double distribution, so the important thing is to see, does it get through the low volume node in the overnight session? If so, we're looking for the overnight point of control as a target. Once it gets here, it is likely to hold steady for a bit and then squeeze into this overnight high. This is basically the scenario where the higher time frame is buying a dip once again. Most likely it's a continuation and then sideways in a market that is digesting this large change that has taken place. There are scenarios 3, 4, 5, and 6 today. A lot can happen with this movement, but overall, I'm looking for a market that is already gapped. We've basically continued the trend overnight, and I'm looking for it to digest a little bit. Okay, so that's what we're looking at. Um, I'll leave you with that. I've warned you about the risk side. If you're not paying attention and are fighting, fighting a trend, because we cannot accept to be wrong. Going to zero on your position is a smart way to reassess and digest what the market is actually doing. It is best to do that than to stay in a position, even if it's in the micros, to stay in a position and continue to manage that position. Reset, look at what the market's doing so that you can prime yourself to take to jump on the next move and to give yourself a chance after a loss to make a gain back. Good luck.